You will bank a lot of money if you're successful, but there's this thing that people have where they see a guy like Floyd Mayweather and they say, well, hey, boxers make millions of dollars. Look, Floyd Mayweather made hundreds of millions of dollars. No. But guarantee you, he ain't making very good money.
That was kind of bothersome. My only question to him would be, where's your soul? It is true.
In a startling turn of events, two of the most influential voices in sports and media, podcaster Joe Rogan and commentator Stephen A. Smith, have reportedly leveled serious accusations against Floyd Mayweather Jr. The undefeated boxing legend is alleged to have orchestrated a sprawling $42 million fraud scheme, manipulated public perception of his wealth, and concealed assets in offshore entities. According to Rogan, an extensive financial analysis indicates that Mayweather funneled millions through shell companies set up in the Caribbean and the British Virgin Islands. These entities were reportedly designed to siphon fight purses, endorsement fees, and licensing revenues away from legitimate stakeholders and tax authorities. Smith echoed these charges, citing purportedly unsealed court documents that name Mayweather as the mastermind behind transactions structured to obscure the true source and destination of funds, effectively defrauding promoters, investors, and even members of his own inner circle. Rogan's investigation points to a trove of bank records and corporate filings suggesting that, over the past decade, Mayweather diverted nearly $500 million through a web of trusts and LLCs registered in jurisdictions known for minimal disclosure requirements. These entities allegedly acquired luxury real estate in Miami and Beverly Hills under assumed names, obscuring ownership and enabling the transfer of fight proceeds without triggering financial reporting thresholds. Rogan further asserts that private equity firms, which once pledged minimum guarantees for Mayweather's headlining events, often marketed as $100 million fights, later discovered through audits that significantly less money had reached theaters and pay-per-view distributors, with the remaining funds quietly routed to offshore accounts.
Nothing after not reading the SEC settlement. So maybe that's why he tells us we can't lose by betting on it. So let's put that to the test with his last 3 NFT projects.
I'm dropping my NFT tonight. FloydNFT.com, August 10th. Go get it right now. Matter of fact, don't even wait till August 10th. Get it now. My NFT. Own a piece of my legacy. Floyd Money Mayweather. I'm not just in 30% or 40%, full 100%. I'm behind you. I'm all the way in.
Now, Floyd's World was indeed a huge success for Floyd Mayweather, who raked in $4.9 million. But what happened to his fans? Well, they're furious because the price of this NFT has collapsed over 90%, and they angrily responded in the comment section, "You already have an NFT project. It's called @RealFloydNFT."
Smith, for his part, highlights exchanges between Mayweather and high-ranking executives at major pay-per-view platforms. In these communications, Mayweather allegedly instructed his advisors to underreport official gate figures by as much as 30%, even while publicly boasting about receipts exceeding $20 million per night. Smith contends these underreported sums allowed Mayweather to minimize his taxable income and avoid revenue-sharing obligations with promoters such as Golden Boy and Showtime. He further alleges that Mayweather exploited his reputation for financial invincibility to secure sovereign immunity clauses in fight contracts, a legal tactic aimed at shielding assets from creditors and litigation, even in cases involving lawsuits for breach of contract or unpaid fees by former sparring partners and choreographers. Neither Rogan nor Smith has provided direct excerpts of these court documents, but both claim to have received them from insiders within federal investigative agencies. Their joint conclusion, Mayweather's financial empire, branded the Money Team, is built less on legitimate prize purses and endorsements, and more on a carefully constructed house of cards, one that begins to unravel under forensic scrutiny. They argue the actual scope of the alleged fraud far exceeds the $42 million figure, stating that number only reflects transactions flagged by overseas financial intelligence units. An additional $150 million in suspicious cash flows is still under review by U.S. authorities.
Ever. All right. Now, Floyd Mayweather Jr., there's a story circulating that Business Insider did talking about this $400 million property deal that he had been discussing here in New York City. But now, according to Business Insider, it's not what you think it is. They said there's no evidence there's been a sale of these properties. And it's 62 rental apartment buildings in Upper Manhattan. Here is what Floyd Mayweather had said at the time on a video that he posted on his Instagram.
I love bringing the people into my lifestyle, showing the people how I live. Now, I know you guys see me on a regular talking about real estate. Well, lately, I purchased 62 apartment buildings in New York City. And what I need you guys to do, slide over and check out the photos. It's not all 62 buildings, it's a few buildings, but guess what? All the buildings belong to me. I don't have no partners. And all the retail down low on my buildings all belong to me. Guess what? You can do the same.
All right. Well, now we're trying to figure out what happened, right, with Business Insider. So according to another update, he did ink a $402 million deal for a Black Spruce portfolio. When he said that it was all his and no one invested, he meant no one was funding his part of the investment but him. And so I think this is something where maybe he owns a piece of this or shares in it, but it hasn't changed hands because the majority owner is still the same owner that it was before. I'm trying to understand what happened with this, but I know there's a story that's circulating, so just putting it out there. Whew, it's a tough one. I'm trying to understand as a real estate person myself what exactly he is communicating when he's saying that he owns this, because they're trying to make it seem like he doesn't, but what it seems like is that he owns shares of these buildings.
When you set these claims against the known facts, the only substantiated legal case involving Mayweather's post-boxing ventures remains his settlement with the U.S. Securities and Exchange Commission, SEC, in November 2018. That case centered on Mayweather's promotion of Centra Tech's initial coin offering, ICO, where the SEC found that he had failed to disclose a $100,000 payment from Centra and additional undisclosed compensation from two other ICOs. Altogether, this resulted in a combined disgorgement and penalty of $614,775, along with a 3-year ban from promoting securities. Though serious, this enforcement action differs fundamentally from the sprawling $42 million fraud now being alleged by commentators. The SEC matter involved a disclosure violation, not a complex financial conspiracy involving shell companies, misappropriated fight revenues, or multi-jurisdictional tax maneuvering. Beyond the civil SEC action, federal prosecutors in New York went after Centra Tech's co-founders in May 2018, charging them with securities and wire fraud for raising more than $25 million through false claims of partnerships with Visa and MasterCard, claims Mayweather had helped promote via social media. Though Mayweather was never criminally charged, those co-founders pleaded guilty and were sentenced to prison. Mayweather agreed to pay fines and cease promotions for 3 years, a result that highlights the clear divide between civil enforcement and the criminal conspiracy allegations now being made by Joe Rogan and Stephen A. Smith. Rogan has gone further, openly questioning the legitimacy of Mayweather's net worth as presented to the public. He challenges Forbes' long-standing valuation of Mayweather's fortune at approximately $400 million. According to Rogan, bank statements he reviewed suggest that Mayweather's liquid assets never came close to that figure. Instead, he claims the bulk of Mayweather's funds were stored in trust accounts that were inaccessible to creditors and carried steep penalties if withdrawn early. These trusts, Rogan contends, are managed by a tight network of lawyers and accountants who report only to Mayweather's inner circle, effectively making the boxer's wealth untouchable both to government agencies and to civil litigants. Smith has been even more scathing, describing Mayweather's financial reporting as creative accounting at its worst, drawing comparisons to Enron, whose executives used opaque entities and off-balance sheet liabilities to obscure the truth. Smith also notes that some of Mayweather's most lucrative endorsement deals, which were valued in the tens of millions, appear in financial records not as clear advertising contracts but rather as fee-for-service arrangements with no identifiable client, raising red flags that suggest these may have been vehicles for fund transfers rather than legitimate business deals. With allegations this serious, the natural question is, why haven't there been criminal charges? Rogan and Smith offer two potential explanations. First, they claim Mayweather's team may have lobbied prosecutors for a preemptive immunity agreement in exchange for cooperation in unrelated investigations. Second, they suggest that the complexity of unwinding decades-old, international financial activity has delayed official action, even in the face of compelling evidence. They assert that a high-level Justice Department source confirmed an indictment was prepared last summer, but was held up due to political considerations linked to Mayweather's fame and cultural influence. Critics of Rogan and Smith's narrative argue that neither man holds legal credentials to properly interpret complex financial documents and that no judge has validated the $42 million fraud claim. They point out that podcast soundbites and TV monologues, however compelling, are not evidence admissible in court. Yet Rogan maintains that his account is backed by forensic accountants and whistleblowers, while Smith insists his insights are drawn from leaked court documents that he personally reviewed. To date, the only publicly documented controversy linking Mayweather to financial misconduct remains his settlement with the SEC over non-disclosure of crypto promotions and his indirect involvement in the Centra Tech fraud, which was prosecuted and concluded in federal court. As significant as that is, it pales in comparison to the wide-reaching conspiracy alleged by Rogan and Smith. If their claims prove true, they wouldn't just tarnish Mayweather's legacy, they would reshape it entirely, transforming him from a legendary boxer into the mastermind of one of the largest celebrity frauds in modern history. Rogan and Smith have undeniably amplified public scrutiny and pushed for more transparency in how elite athletes manage their fortunes. But until independent investigators or official agencies dig into the layers of corporate secrecy, the question remains, is Floyd Mayweather truly the architect of a massive fraud, or merely the target of a coordinated campaign of rumor, innuendo, and sensationalism? In recent years, a diverse cast of insiders has added fuel to the fire. Former protege Gervonta Davis, boxing Hall of Famer Rick Glazer, rapper 50 Cent, MMA icon Conor McGregor, and YouTuber-turned-boxer Logan Paul have all pointed publicly to Mayweather's potential financial vulnerabilities. Their claims include everything from unpaid debts in Dubai, to multi-million-dollar promissory notes, IRS tax liens, and even thwarted gambling wagers, painting a sharp contrast between Mayweather's luxurious public image and the behind-the-scenes struggle to manage a nine-figure fortune across multiple jurisdictions. Gervonta Davis once claimed on Instagram that Mayweather was essentially stranded in Dubai due to borrowing money and failing to deliver on promised services, alleging that he was taking people's money and not doing what they paid him to do. Davis later doubled down on X, urging Mayweather to go live if he denied the accusations and insisting, "You gotta pay them people that money back." Rick Glazer lent credibility to the claims by tweeting that his contacts in Dubai confirmed Mayweather was indeed being held in a government court system due to substantial debts, adding that Dubai takes financial delinquency very seriously. Conor McGregor, during a major press conference in July 2017, mocked Mayweather's IRS liabilities, suggesting a chunk of his nine-figure payday would be used to settle an $8 figure debt. That wasn't just hype. Records show a federal tax lien filed in April 2017 indicating Mayweather owed $22.2 million in unpaid taxes for 2015, a sum he attempted, but failed, to negotiate down into installment payments until after his fight with McGregor. 50 Cent, who once fronted $2 million to launch TMT Promotions back in 2012, claims he was never repaid. More recently, he sided with Davis's Dubai accusations, posting to Instagram, "I got some money if he needs it," a comment that was both a jab and a subtle confirmation of the rumors. In early 2024, Logan Paul announced plans to sue Mayweather, alleging he's still owed around $5 million from their June 2021 exhibition match. Showtime, which hosted the bout, clarified that it had paid Mayweather Promotions in full, implying any shortfall lay with Mayweather's own camp. Looking further back, federal court records dating to 2001 show that Mayweather has faced multiple IRS liens totaling more than $26 million across various tax years. In legal filings, Mayweather's team argued that while he was asset-rich, his cash was tied up in fight purses and endorsement deals. And Mayweather's gambling habits haven't helped either. Before the 2017 McGregor fight, he attempted to place a $400,000 bet on himself, but the sportsbook declined it due to regulatory concerns. The move showcased both his love for high-stakes wagers and the complications that come with athletes betting on their own matches. Then came Super Bowl 2024, where Mayweather turned heads once again. He was seen visiting a bank with his entourage, hauling out bags full of cash, preparing for his weekend in Las Vegas. "Just getting ready for Super Bowl weekend, we had to get the ones, make it rain," he said on camera. A viral YouTube clip from All Urban Central showed him dropping massive sums at Louis Vuitton, flaunting a watch collection worth an estimated $100 million, and reserving a $1.13 million luxury suite at Allegiant Stadium for the big game. "I don't kiss, and I never have to beg for anything, especially not to get a Super Bowl suite," he wrote on Instagram. "I get my own seats and suites so I can do what I want and invite who I want. I'm blessed to be taking 34 people to experience the first Super Bowl in Las Vegas." However, not long before this extravagant display, Mayweather admitted on Instagram that he had to pay $18,047,181 in taxes. "Just before I paid that little Super Bowl stuff, I had to pay Uncle Sam aka the IRS $18 million. Despite the eye-watering payment, he still placed a $95,000 bet on the Kansas City Chiefs, winning $23,000 when they claimed victory in overtime. It was a small recovery after his $10,000 loss the year before, betting on the Philadelphia Eagles. Meanwhile, reports emerged that Mayweather had decided not to contest the IRS's assessment of $5,549,675 in taxes and $119,935 in accuracy-related penalties for the 2017 tax year. While $6.7 million would devastate most people, for Mayweather, it might barely make a dent. The IRS audit of his 2017 return concluded with a statutory notice of deficiency, SOD, issued on February 2, 2022, setting a deadline of May 3, 2022 to file a petition. He made it just in time, submitting the petition on May 2, 2022, which had been dated April 27, 2022. The petition challenged only one item, the disallowance of a $14,142,220 legal expense deduction claimed through an S corporation. While there may be a fascinating backstory to that deduction, the documents offer no detail. The calculations leading to the $5.5 million tax liability were entirely redacted, leaving us in the dark about what his taxable income looked like before the $14 million adjustment or how his tax bill grew so sharply.
People executing these scams are like Anon people hiding behind a Pepe avatar. And of course, there's a laundry list of famous influencers, Logan Paul, Kim Kardashian's, David Dobrik, that have all endorsed these absolute shitcoin scam casino rugs that leaves their investors high and dry because they paid them a bunch of money up front and maybe they didn't know any better because it's such a nascent space. But I am just flabbergasted that the highest paid boxer, one of the most famous people on the planet, Floyd Mayweather, has managed to become a repeat offender as a scam artist. Now everybody knows Floyd's an opportunist. He's an entrepreneur. He likes to make money. He always has money, talks about money. That's his shtick. That's his persona. That's fine. You can make money. You can be a hustler. You can get paid a bunch to box, do whatever you want.
The tax court received the petition on May 2, 2022, which is a bit more recent than I typically prefer to cut things. The petition itself was dated April 27, 2022. Interestingly, the petition appears to be quite basic, which is surprising given the nature of the case. In it, the taxpayer contests the auditor's $5,549,675 assessment, which resulted from the disallowance of a business deduction claimed by the taxpayer for the 2017 tax year. The taxpayer formally petitions the Honorable United States Tax Court for a redetermination and a finding that the expenses claimed were deductible as ordinary and necessary business expenses under the Internal Revenue Code. In addition to disputing the main assessment, the taxpayer also challenges the Section 6662A accuracy-related penalties, which were assessed in the amount of $119,935. The petition seeks both a redetermination and abatement of these penalties. There's also a bit more detail provided in an attached document. According to that attachment, the taxpayer argues that the deduction disallowed for the 2017 tax year, referenced in the notice of deficiency, was related to multi-year business litigation. The taxpayer asserts that expenses incurred during that litigation were legitimate business expenses and should therefore be deductible under IRC Section 162A, as ordinary and necessary business expenses. As we scroll forward through the upcoming docket entries, we notice an entry for Floyd J. Mayweather, docket number 10,353-22, which was filed on November 1, 2023. This comes despite Mayweather's earlier claims that pay-per-view revenue issues were the reason he couldn't fully compensate YouTuber Logan Paul following their exhibition match in June 2021. However, Showtime, the company that hosted and broadcast the event, has since distanced itself from the dispute, leaving Mayweather solely in the spotlight as the matter continues to unfold.
In 36 months, with one of my new investments, I would be making $300 million a month.
What investment is that?
In real estate. I'm heavy in real estate, even though I got a lot of cash. OPM. You don't always have to use your money. That's why it's very important for y'all to make sure y'all keep your credit right.
Stephen Espinoza, the president of the company managing the fight, confirmed that payment had already been made to Mayweather Promotions. According to him, it was now their responsibility to distribute the funds to the fighters. "We've always dealt directly with Mayweather Promotions," Espinoza explained. "It's up to them to handle payouts. We don't have separate agreements with each individual boxer, so any delay, well, that's on their end." He went on to say, "There's a large sum of money being dispersed right now. If there is a holdup, I chalk it up to the process. Sometimes people underestimate how long it actually takes for the funds to clear. But patience is wearing thin. Despite Mayweather urging the 27-year-old fighter to wait, the young boxer isn't backing down. He's already issued a stern warning and is reportedly ready to sue Mayweather's company over a $3 million unpaid balance from their exhibition bout. "He hasn't paid me yet," he told TMZ Sports. "It's too late to negotiate, this is going to court." He even threatened jail time if Mayweather continued to withhold the money. Meanwhile, ESPN analyst Stephen A. Smith chimed in with a broader take. He questioned the long-term impact of Mayweather's persona, saying younger athletes no longer admire Floyd for his talent or boxing IQ, but for his money. "They're copying his flash, not his discipline," Smith said. "The confidence, the showmanship, that's what they see. Not the work ethic that got him there."
They sold for millions of dollars. I know a dude he got rich. He was an artist.
Yeah, but
he got rich
then-
selling NFTs. Yeah. In the beginning, when everyone was like frothy with it, this thing is like a shit cartoon. And how much did they go for?
I think it's Ether. So 111 Ether would be the price. That's 3,000 a coin right now. So that'd be 300 grand.
300 grand.
It said it was sold at 769. So that
But
would
you
have
could
been
just
like close to a
screenshot
million.
it.
So it was
Just screenshot
sold
that
at
shit.
769. So it was sold at close to $1 million.
And that's it for today's video. From unpaid debts and court threats to the troubling influence of wealth over discipline, Floyd Mayweather's story continues to blur the lines between success and scandal.
Don't forget to like, share, and subscribe to our channel. For more exciting videos, make sure to hit the bell icon and stay updated. Subscribe to Boxing Hub now for all the latest in boxing.